What's up, everyone? Good afternoon. It is November 1st, 2020. My name is Faisal, and usually I do these Sunday videos with Amal, but he's traveling today, so y'all are just going to get me. And I thought about doing some things differently for this video, so I'm going to try and keep this short and keep it more focused on a specific topic. Mainly, what we're going to go over today is the stocks, or definitely some stocks that I think will do well um, after this election, and just for those who are trying to position themselves for this election, I think I just wanted to go over some of the things that I feel like could happen during different results, and you know, I think there are also some picks in the market that will be great either way. So let's go ahead and get into it. For the most part, I am primarily someone who believes that there's not only going to be a I think Biden's going to win fairly easily, but I think the Senate is where it's going to be very interesting, and for the most part, I think there's a good chance for it to turn blue. Um, Even in Texas, there's like some chance. I know that there's a lot of people who are skeptical, but um, I have just seen the not only the voter turnout, but just the amount of people who I thought had not voted or would not vote. They didn't vote in the last election cycle. They voted in this election. I already know who they voted for. It's amazing just how many people have been brought out to vote who had not voted in the last election. And so I think Texas has a real shot of becoming blue in the Senate, and I think that's going to, if Texas can become blue, I think there are also other states that could end up the same way. And if we get that entire blue wave from the presidency to Congress, you're going to see a lot happen to this market. It's definitely going to be shaken up a bit, and I don't really know if the market has already priced in this blue wave or a gridlock where it's the Democratic presidency and the Republican Senate. But for the most part, I think you could argue that it may have already priced in a Democratic sweep because of how some of the sectors like solar, marijuana stocks. I think let me take a look at Tilray real quick. No, Tilray is still bad. Moved up a little bit, but for the most part, I guess even then, these stocks are very heavily regulated. And we'll get into marijuana in a little bit, but if there is a blue wave, yeah, expect solar, um, marijuana stocks, healthcare itself should probably be a place to stay away from, unless you're talking about a specific industry, which I'll go over in a little bit. But healthcare insurers, they're going to see some disruption as more healthcare reform comes into light, and definitely drug companies. If you get a full Democratic sweep, I think one of the easiest things you can pass, and even if you don't get a Democratic sweep, one of the easiest things that will be passed, I think, within the next 4 years is drug control pricing. So I don't know. I've been a believer on healthcare. Like for instance, stocks like AbbVie, I still have a little bit in there, growing 17% this year. Next year, I had some really nice earnings gapped up, but overall, I've been disappointed with the earnings that have come out, especially with Eli Lilly. Eli Lilly missed their mark. I mean, this was one of my favorite pharmaceutical companies, and it looks like the estimates are coming down now. Johnson Johnson and I want to say AbbVie and BMY are still okay, but once again, I don't think they're going to see that much momentum. You could see them stall out in the same way that um, airlines and these other bailout stocks are essentially stalling out due to COVID. So I think the healthcare sector, at least for the next 1 to 2 months, maybe 3 months, you could see some uh, negativity being priced in, and these stocks should do bad. So even the the UNHs, the CNCs of the world, I think they're not going to have they're not going to be that good because healthcare reform is probably on the way under a full Democratic sweep. And okay, so we talked a little bit about the losers. Let's get into some of the winners. So I just mentioned um, solar and marijuana stocks. Both, I think we know why they're going to benefit from a Democrat sweep. Um, so with solar, you guys already know my main dude. Solar Edge has been uh, just the main way I've wanted to play solar stocks in general. I still think it has a lot more room to go up, especially considering it's still growing or estimated to grow 47% this year. 2020, I guess, has been kind of a rough year, but once again, these stocks have been totally unfazed by the fact that earnings have declined because of the fact that, like I said before, you could have had that pre-pricing in of a Democrat sweep. And I think, and it may not even just be that, because I think even Republicans have shown some intent to invest in renewable energies. So the likelihood of this technology increasing its adoption rate throughout the U.S. Specifically, I think has increased definitely from in the last 2 years. So pricing that in, that's why you could have this stock go from 75 or actually, let's not even count that. Let's go from 128 to 157. So in 2 months, or it can double within. It broke out right here. What is that, 7? So in about 4 months it can double, and that's pretty good. And I think that that's definitely pricing in not only this type of growth, but also the fact that opportunities could expand if we do get this Democrat sweep. So Solar Edge, Enphase, both of those two have been my go-to solar plays. I'm not really a super experienced solar guy. I just kind of know the best winners like in the space that are growing. I mean, look at Enphase. They're 35%, 48%. Revenue is still eking down this year, but overall, it's still very good numbers, and they are not that leveraged. So, there's definitely more room to expand as the opportunities increase over time. So, though, just in terms of solar, you may like a solar stock in general. I think solar stocks, just the basket of them, could see that the momentum being carried, just like we saw the basket of momentum being carried in the software companies. Now, at some point, you will have the assortment of winners and losers, but at this stage, I really feel like even though you've had these stocks, like damn, Enphase was a dollar stock in 2017. That's incredible, actually. But you've had these stocks go up considerably, like just a lot. But once again, I think this is a case where the expensive can get even more expensive, and if it's growing at this rate for an extended period of time, you'll see this valuation come into play. Obviously, the volatility may not be the same because we're in a very volatile time, but uh, don't expect this stock to come crashing down anytime soon. That's for sure. And then to move on to another long, so if we do get this Democrat sweep, I think marijuana is I think definitely some federal marijuana regulation could happen within the next 4 years, and I think it probably will. I'm not going to say for certain because I'm not too sure on Joe Biden if he's going to fully endorse that, but um, just for all sakes and purposes, let's go ahead and say that it's very positive if they do get a sweep. So the two ways that I'm playing marijuana, like I mean, we just saw Tilray. I have not come across these companies. Um, they've been in terrible technical downtrends, and for the most part, I like to see the estimates come up a lot before I invest in it. And so far, the estimates are still looking very poor, and I think the regulation overhang in this industry, even when it does get federalized, will continue to halt these stocks from shooting up like crazy. So, even when Biden does win, I expect a pop, but I don't think they're going to go anywhere near right here. I think you may get a pop like for CGC, you may get a pop up to $24. It'll come back down and probably start to consolidate and chop around or I'm sorry, until more clarity comes about on the regulation side. Um, but other than that, I think if you're doing the pure grower route, I think that's the exact way to go. I think you got to be patient, and I would not expect a lot from it. Now, the two ways that I like to play it, SMG is a fertilizer. They do a lot of, or I'm sorry, they make a lot of the fertilizer for marijuana growers and everything like that. Like you need fertilizer in order to grow the plant. So I mean, this company has been on a tear for a long time. I mean, from 2018, it's been really accelerating its earnings nicely. 2020, it's just gone up 61%. I mean, the stock you would think it should do more, but nonetheless, it's still great. And then 6% next year, that's kind of a big drop off. But once again, these estimates could be conservative. And when you get this preparation for a federalization of marijuana, I think, of course, you're going to see these estimates be very low because I don't know if that's necessarily baked into them. You're seeing revenue growth pretty much stay in the double digits. I mean, I guess there was just that one bad quarter in June when everything kind of collapsed, but once again, picking it back up, good earnings bounce, and for the most part, I think SMG is a fantastic, safe way to play just marijuana growth in general. And then the next one, let's go ahead and check out IIPR. Now, this one was a little bit interesting. I came across this stock, I want to say like a month ago, and I've just been watching it because I didn't really know how much sustainability this company had, considering like I expected it to trade with other marijuana growers. And I think marijuana growers, like I said before, none of them were giving me any signals or anything like that. But this one caught my attention because its growth rate was always incredible. And what's even more weird is that it's a REIT. So, REIT is like a portfolio of real estate assets. And these real estate assets are pretty much centered around medical marijuana. So this company will essentially buy the land, the scope out, I guess, the best land to grow on, buy land, and then lease that land to state governments at this point so that they can grow medical marijuana. And it's been growing fantastic, especially as more states have legalized medical marijuana. Um, I really don't know how it's going to work when everything is federalized. Like, will you just be able to buy medical grade marijuana? Like, I don't understand how that whole thing is going to work when everything is federalized. But at this point, I think this is a stock that could really benefit not only from the potential blue sweep, but also a stalemate. Because if there is not that much traction, like, I mean, of course, you could still get, like, with the presidency and Congress remaining blue, you could still get a good bill passed for federal legislation. But just in any case that it doesn't go that way and it goes more on the route of marijuana should be used as a for medicinal purposes and not so much as recreation, I think this company will see an explosive growth in earnings, and you're already seeing these estimates go up like crazy. Once again, I really don't know how it's going to shake up when everything is federalized, but for a stalemate, I think this is a common sense play that would do well, especially considering that medical marijuana itself is something that's becoming more popular, and more states are voting on to at least have that. Obviously, you're getting states to recreationalize the sale of marijuana, but for the most part, I think betting the medical route is probably the safest route. And just to touch on it, it's got no debt. The fact that it's a REIT means it already has a high dividend yield. It's got a 3.6 dividend yield, growing at 57%, 50% in 2021. And look at this revenue growth rate. I mean, this is absolutely fantastic. I mean, I'm so surprised that this stock has not gone up like insane amount. It's been growing this way since 2018, I guess. So in 2018, 26 months. Yeah, I'm so surprised that it's not up even more. But once again, look at this huge, big cup. Now just broke through after a very ugly week this week in the market. But um, I think this is a name that I'm looking to get into soon. And I think it could bottom out somewhere between, you see, this peak is right here, right here. It could be between like 104 and 106. So maybe 105 would be a good entry point just based on this loose, very loose technical analysis. But this is definitely a stock, if I'm a marijuana guy, that I want to keep an eye out on. I'm not saying to like bet all your crops on it, but there are a lot of things to like about this company, and it has a little bit of safety in that dividend. It's got no debt. You can see the growth rates in it, but once again, there is still that uncertainty of how things will play out when everything is federalized. But definitely keep an eye out on this one. All right, so covered a little bit on the if the Democrats win, what's most likely to happen, and for the most part, let's go ahead and move on to the other stuff. And I'm not going to talk about if Republicans win. I really don't think Trump is going to win. I'm not going to get into it. The stocks to get into if he does win, I'll make another video with companies that I expect to do really well. And if he wins the presidency and Republicans keep the Senate, then yeah, I'll do a completely new video detailing some of the stuff that should do good over the next month or 2 months. But for the most part, I'm just going to keep this centered around my ideals. So just deal with it. So moving along, something that I think is going to really benefit, and I've talked about this plenty of times before, is the industrial sector. And that is largely due to the fact that the infrastructure bill is on its way. The only difference between this bill, like honestly, the election doesn't really affect the odds of this bill coming out in general, in my opinion. It's going to come out. I think that is where you're going to get the employment bounce that we desperately need, because the small business area is just doing terrible right now, and permanent job losses are at an all-time high, or at least a 10-year high. Um, but once again, that bill has come out, and the only difference between a full Democrat sweep and a gridlock would be like the timing of it. I think if we get a full Democrat sweep, you're going to have a infrastructure bill as early as next year. That'll hopefully create a ton of jobs and get this country back on track from an employment standpoint. If it's a gridlock, you may have the time stalled. It could come out late next year or even 2022. I wouldn't be surprised, but um, ultimately, I actually don't even know. I think even then, I think that Democrats could still get something passed. I mean, if they control the Senate once again, um, I'm sorry, this is a scenario if they don't control Senate, like even if they control the presidency and Congress, I'm sure they could still get something passed, because it's not like you need all three to sign on. Um, but anyways, I think once again, the industrials are going to be the place to be, because that is where the job growth is going to come to. And so, I've talked about common sense names like what you call it. I've talked about um, 3M. I've talked about Honeywell. I've talked about different companies, broad industrials that are doing phenomenally well. Even now, I think they're close to all time highs, but um you know just that, like, let's just take a look at it real quick. Like, they're good and everything like that. The uptrend is still fine, it's still intact, but they are breaking some key levels that I think they were supposed to hold on to. But once again, industrials look really well. If you guys didn't notice, on Friday when the market was selling off, industrials had actually a fantastic day. Honeywell was up 35 cents when the market was down so much. And let's check out, what was another one that was up? I think URI. Yeah, URI is still my top broad pick for this industrial movement. I think they're going to see a ton of business increased if there is mass construction on roads and just different infrastructure systems and everything like that. URI is going to be essential to delivering everything that's needed to complete those projects. Um, but for the most part, there was one that I wanted to go over. Um, it's a smaller company, but I think this is the ticker. Is this Sterling? This is one that is on my radar, and for a couple reasons. So they're a construction building company for transportation and water infrastructure, as labeled right up here. Um, they're a Houston company, or well, I guess Woodlands is. Yeah, I'll put y'all in there. But this company is growing. This is what caught my eye. So if I'm looking for companies that could really increase business through government project, different things like that, I want something that has to do with building services for transportation, and definitely water infrastructure. Both those things are needed for um, these operations that are going to enhance the infrastructure of America. And Sterling, I'll be honest, I haven't done my deep dive work into it, but it's definitely caught my eye because of how the earnings are not only accelerating on a yearly basis, but quarter to quarter, it seems like, okay, um, it felt like everything kind of stalled, even in the industrial space during March, April, May. But look at this company. I mean, grew 71%, then 117%. And then earnings grew 32%. I mean, they really did not fall during COVID, which I think was very rare. Like, let's go ahead and check out even at Deere, a company like Deere, which has made all-time highs like crazy. Um, had this much decline in earnings, going to see this much decline this year, and yet this company Sterling, it definitely caught my eye from that perspective. I got to do my deeper dive, whether or not they're buying back shares or they're doing something to manufacture those numbers. But once again, you can't manufacture revenue increase. You just can't. And the fact that it stayed this steady is something that caught my eye to a very large extent. So for everyone who's looking for industrial plays, you can do the main routes like 3M, Honeywell, all those guys. They should do fine. But this company is Sterling, and once again, I like it as well because it's kind of got this pattern going on where, okay, I guess this company was probably an entirely different company back then. But as of right now, we're going to go ahead and look at it on a weekly because it's probably different. So this cup and handle, right? Or I'm sorry, not cup and handle, but this giant cup that has been forming, never broken out, even come close to it. No, no, no. This was the first time that it broke out, I guess, to no. Well, it did break out above that a little bit, but it did not close above it. But it's pulled back. If history tells us anything, the stock is probably in tune to pull back, but it's got earnings coming up Tuesday or Monday, I'm sorry. And so that could be something that could traject its or change its trajectory. But for the most part, if the estimates are lining up that way, it's going to be making almost $2 in 2021, and it's $40. Like that's very cheap. And you're talking about revenue growth increase. Like I know we can only look at the past 6 quarters, but or 8 quarters, but look at this, like 1%, 1%, 1%, 2%, 0%. And now you got 36%, 32%, 51%. And I believe I checked the overall growth, I think, for revenue this year is like it's a lot, but in 2021, it's only expected to be 6%. But that's still above the norm of what it was giving you beforehand. So even though this may be just a great year, I think once again, it's still enough to break out above this previous cup and at least try and test all-time highs because profitability is all-time highs. I believe margins are close to all-time highs, if not at all-time highs. They're paying down their debt, or I'm sorry, no, they just added debt this year. But once again, that's fine because the rates are extremely low. But yeah, once again, when you have this type of revenue acceleration and earnings acceleration, there's no reason for the stock to not break out above that, especially when it's higher relative to its previous highs. All right, and lastly, we are going to talk about the tech sector because I think tech is going to do good no matter who is in office. I think that's a very common sense thing. I know y'all probably agree with it. So um, let's go ahead and dig a little bit into that. But it's tough right now because we could be in the middle of a broader pullback, and considering a lot of these stocks have been very extended, you've seen really bad selling this week, like MongoDB down 8%, Peloton down 10%. It's a little bit of a tough time to try and figure out what exactly to buy in a tech space. But I got a couple names that I do want you guys to keep an eye out on that I'm definitely looking to add because they've been kind of underappreciated throughout the year. Definitely in the recent spectrum, they've been underappreciated. So let's go ahead and get into it. The first stock that I want to talk about is Dynatrace. Now, I have been talking about this stock for a little bit actually. It's been a favorite of mine. I liked one. I actually liked their website. It looked really cool. That's always a big deal for me. It's a secret of mine. If I can understand and navigate through a website easily, that's very good for me because I'm not a super technical genius type of guy. But if you have the product to where even I can understand it from a basic level just by navigating your website and I can see what makes you unique, then I like you and I definitely take note of that. And Dynatrace was also a company that reported this week and actually sunk. Like if you notice, it went down 18.5% this week. Okay, this stock sunk. Okay, and you could see it even beat estimates by 200%. It was just a terrible reaction. I think it was on Wednesday when the market had really, was coming into a lot of pressure. But I saw that report. They beat on everything. They beat on current quarter. I think they barely beat on current quarter estimates, but they raised the full year guidance. They raised next year's estimates, earnings estimates. So everything looked fine for the most part, from the outside. And I actually thought the stock should go up. I definitely did not think the stock would see this type of sell off, especially considering this was one of the safer picks in my mind because it's not a super extended growth stock. Yeah, it's growing 83%. A little drop off in 2022. It's growing, I want to say, over 100% from 2019 to 2020, and then 83% from 2020 to 2021. Still trading at a 70 PE with those types of growth rates. earning or revenue acceleration going like really nice, not too much debt. There's a lot of good things to like about this stock, and it's not super extended. So to have this type of drop, I think is a gift in my mind. I may end up picking up some shares this week. This is probably one of the only ones that I would consider picking up this week, even during the turmoil, because once again, I think it's just gotten too oversold. It just feels like it reported during a very nasty time, and that's just the luck of it. Like when you report on a terrible day when the market just feels like it's about to collapse, like it did on Wednesday, and uh, that's what happens. And it was a good report. It was a report that you should definitely feel confident in the growth going forward. So I may pick some of this. I like that the short interest is that high. It makes me feel like these shorts could cover it, and this stock could go up very nicely in a short amount of time. So that's one of my only plays personally for the week, and I think that this stock will continue to do good even next year. And as the election rolls along, I don't think you're going to see the stock move that much because it's been so heavily sold. So this is definitely one name that I would keep my eye on that could be somewhat of a value in the high growth space. Now, once again, when you look at this thing, 70 PE ratio, you look, uh, I guess that's the only thing that's kind of extended because it's not even extended anymore. So yeah, I guess you could say it's a value play for definitely growing this much. I think this year over 100%, next year 83%. So yeah, that's definitely my top software pick for this week. And going forward, I think it's going to do very well no matter who wins the election. But once again, this is just the market that we're in. Like there are going to be some assortments. There's going to be some events where it's going to throw people off. Like I still think there's a possibility that even no matter who wins this market, it's just going to sell off, and the media is going to come up with some headline as to why it's selling off or whatever. So I wouldn't pay too much attention about it. Once again, you just got to find the companies that are giving you discounts that have been over devalued, and just kind of stick with them. You got to pick your points, take your shots, and hope for the best. Okay, lastly, this is the last industry that I'm going to cover because I think this one is um, definitely one that I know Dynatrace is one that I said I would pick up this week, but going forward, I think in the near term, I think these medical device stocks, and I've said this for a little bit, it's been a pretty tough sector to trade because I've been a fan of Boston Scientific, and that stock has just I mean, I got out at the right time, but I mean that stock has just collapsed significantly, even though the earnings and everything looked fine. And Medtronic has also collapsed to some extent, but I think for the most part, this sector is primed to do really well in the coming weeks, largely due to the fact that COVID is going to be a a driver or a halter in this market. And when we do get or I'm sorry, if we do get a president who, like Biden, I think he's going to allocate more money to testing and definitely alternative testing devices. So ultimately, I like things like Abbott, which has come out with their 5-minute testing. I think the estimates show for themselves, but more specifically, I think the key stock in this industry group, the medical testing diagnostic industry, actually there are two. DHR is a big one. It's not just a testing company. It's actually just a very diversified company, but they have seen accelerated revenue as a result of COVID. They've directly labeled COVID as an accelerant of the revenue, and I think this can speak for himself from March to June. Look at the jump not only in earnings but in raw revenue. I mean, it's been insane. This company is on a tear, and even though it's so extended, I bet you this company will probably just keep grinding up to 280, 300. Like I don't see anything that could stop it at this point, especially considering COVID is still plaguing our world, and the need for testing devices is so high. But Danaher is great. But the key guy in the sector, I think, or I'm sorry, in the industry is Quidel. Now, Quidel, like just this company took a fall because I think it was that day that Abbott came out with their 5-minute testing, and all these companies, like I'll go over Hulks, all these companies took that drop on that week. Let me go ahead and do Codex is another one. Yeah, so you could see that there was just that specific news when Abbott came out. There was just this fear that, oh no, that was a clear winner or something, and there was going to be no hope for these other companies to come out with these testing products. But Quidel, I don't know what the heck this company is on, but look at the earnings growth, look at the revenue growth, look at the estimated. It's going to make $16.45 this year and $32 in 2021. Just think about that for a second. That is absolutely insane if they can achieve that price or those targets. And with very little debt, high cash generation, this company is setting itself up to be like, the opportunities are there. Like, if they can come out with the great products, and I'm not an expert in testing diagnostics or even what Quidel's products is, so you should go check them out for yourself. But just relative to what the market is giving you, I don't know if there's another company out there that has a better runway for meeting their high estimates than Quidel. One, because like I said, COVID continues to plague this country, this world, and the need for testing solutions is so high. And I think they're one of the they're one of the leaders in that space. I could be wrong. Once again, I'm not an expert, but I think just based on what I've read, they are one of the leaders, and the estimates kind of show that in itself. So, um, if I'm looking to play, even this week, they just came out with earnings that were good last week. If I'm looking for something to keep my eye out on to play as COVID continues to rise and the market gets sold off on that, look for a QDEL to be one of the stronger stocks. That I think that's the one that's the gold mine. I think it's, even though it's gone from $80 at the low of March to almost $300, I think this is like a $500-$600 stock in a year or 2 years if it can meet the estimates. Maybe $800 in 2 years if it can meet the estimates. So keep an eye out on this one. Still got a nice amount of short interest to pump up the stock. So this is my top pick for the medical testing industry, if you will. All right, guys, that's it. I hope you enjoyed this video, and I hope it gave you a little bit of insight. I know I didn't stay too much on the fact that it was election based, but once again, these are stocks that I think will still do good, despite the volatility that could come from the election cycle, or even they could do well in any case of what the election results will have. So I hope this gave a little bit more clarity. Once again, these are just my opinions. You know, you could have your own fair share of opinions, and feel free to message me on the Discord channel. If you're a member of our Alpha Trades Discord community, I'm always ready to chop it up and discuss with you. But thanks for listening. I hope to see you guys next time, and have a good one. Happy trading.